Welcome to Daily Wisdom from the Flippening podcast. These episodes feature short, to-the-point clips from our full-length interviews. We talk to the men and women behind the trades, crypto exchanges, and regulations with the goal of helping you become a better, more informed investor.
Hi, I'm Michael Kaplan, editor of the Flippening podcast. Today's episode is from a 2018 conversation with Eric Meltzer, partner at INBlockchain, China's largest crypto asset fund. We discuss his preference for relationships and business opportunities over a rigid investment thesis. For the full conversation, check out Flippening episode 17. And now, without further ado, our conversation with Eric Meltzer, partner at INBlockchain. Enjoy.
It sounds like INBlockchain is really focused on teams and gets involved really early in token-only projects, or do you also do equity deals as well?
We do absolutely everything. So we do equity, we do tokens, we've invested in like training programs. I mean, we pretty aggressively have like no thesis in the space. We're just like very opportunistic and we go after, what we think are promising teams. And I think that filter has historically worked very well for us. And I think it will continue to work very well just because there are so few teams that can actually ship meaningful stuff in this space that like, if you just restrict yourself to teams that you're super excited about, you'll do well. It's funny. Like I've had friends be like, man, you really seem to like love the founders of the stuff that you invest in. And it's like, that is our bar. If I don't like fall in love with the team when I meet them, then we're probably not going to invest.
Let's dial in on the statement you made about a thesis. So I've heard a lot of funds recently talk about the strength of their thesis, but it feels like after further questioning, there really aren't any intellectually rigorous theses in the space. What is your take on a thesis? Is it a limiting filter? Is it helpful? Is it not helpful? Where do you come down on that?
I think it's not helpful. I think for the most part, it's like marketing. And so, for a lot of these new funds, like I respect that. They have to go kind of do like what I think of as like content marketing, where they go and write a bunch of fancy thought pieces about how they think about the space. The problem with those is that they age extremely poorly. And so if you read people's, hot takes about the space from 6 months ago, they already appear almost nonsensical. And I think with a space that moves as fast, that's just going to keep happening. And so it's much more important to just like embrace the uncertainty and just try to find the best projects at any given time rather than like have some fancy, like overarching conceptual thesis.
I believe you said this last time, there's probably just not enough deal flow in this space to have a thesis. You're going to miss a lot of opportunities. I do think though that there is a need for differentiation, and there's a number of dimensions along which a fund can differentiate itself. So it seemed like at first it was all just about exposure to the space, that someone was a trusted party or a trusted partnership. They had the custody thing under control. They had reputable backers, and it was all about, institutional investors that wanted some exposure to Bitcoin or to Ethereum. Now there's a whole bunch of funds. How do you think a fund does go about differentiating now that so many people are offering versions of basic exposure?
I can talk a bit about like some of the funds that I co-invest with a lot, because I've chosen those basically because I really like what they're doing. And I think that they bring a lot of value to the projects that we invest in. I mean, also just a lot of these are just people I like. And it's always fun to like hang out with friends and invest in cool stuff. One of the people that we've started co-investing with is like Binance. The large exchange has their own fund now called Binance Labs. And we co-invested in this project called MobileCoin with them, which was actually their first big investment. And I've been super impressed with the team there. They're extremely smart and they have a deep view of the space. But I think what's cool about, a fund like that is that they're coming from a place that's totally different from your average fund. I mean, so these guys are running this enormous multi-billion-dollar business that's at the core of a lot of these token economies. And so, I mean, besides the obvious benefit of like, they can help you get onto Binance, which is certainly not guaranteed, by the way. It's probably easier for projects that they invest in. Beyond that, and I think perhaps more importantly than that, they've just seen so many projects. They've seen what works. They've seen what doesn't work. And so they're able to provide like really useful guidance, much more than like, just some guy that's into Bitcoin and like found a couple $1 million to go invest. I really like those guys. And I think in general, like funds that are coming out of other large crypto businesses, like Coinbase got a lot of flack for starting a fund. I think Coinbase starting a fund is totally awesome. I think it's a no-brainer and that they should do it. And it seems like it's going very well for them so far. So yeah, I'm really into funds that are spun out of existing big crypto businesses. Another fund I really like is Linda Xie and her partner Jordan have this fund called Scalar Capital. And so they actually do have something that like kind of approaches a thesis, which is just that like privacy coins are super undervalued. And I think that's like simple enough that I'm okay with it. Like it's nothing too like over intellectual or whatever. But what's cool about that is it's allowed them, because they mostly focus on privacy, although they invest in a lot of other stuff too, they've been able to become complete experts in the privacy space. And so they're able to make really, nuanced decisions about what to invest in and how to allocate capital within that space. Funds like that like maybe don't have a complicated thesis, but do limit themselves to some specific niche in order to have really a lot of time to do a deep dive into it is potentially good, especially like if you're a really small fund. So like I believe Scalar right now is 4 people. It might be 5 by now, but it's very small. And I think if you have, limited manpower, it makes sense to limit the kind of stuff that you invest in, and so that you can have like a really deep understanding of the companies you are involved with.
That's it for today. If you like what you heard and want to support the show, please consider leaving us a review on iTunes, Stitcher, or wherever you listen to podcasts. If you decide to leave us a review after subscribing, we'll send you a free Nomics t-shirt. Just hit us up on Twitter at username NomicsFinance after you've left the review, and we'll hook you up. You may also be interested in Nomics.com, our crypto market cap and pricing website. Check us out at Nomics.com, spelled Nomics. Now stick around for our legal disclaimer. All opinions expressed by podcast hosts or guests are solely their own opinion and do not reflect the opinion of Nomics or any other company. This podcast is for informational and entertainment purposes only and should not be relied upon as the basis for investment decisions. The producers, hosts, and guests of the show may maintain positions in the companies or assets discussed today.